This is lesson 8, where we continue with our journey. And I hope before watching this, you've done your due diligence, not just watch the previous video, especially if you're new here, and done the homeworks in the previous lessons that we I set for you, the tasks I set for you to identify, at the end of each lesson. If you've not done that, I recommend you go back. Don't even bother going further. Like I told you, everything we're doing is building on whatever it is we've done previously. So right now in this lesson, uh, this is where you start bringing everything we've treated individually together to make a trading decision, because at this point, this is the point of execution where you either press the buy button or you press the sell button after doing your whole thing. This is where the completion of all your analysis, because at the end of the day, remember, in the whole of what you're learning, is just to help you make that decision. Are you wanting to buy or sell? And any of the decision you make, question is, why are you making that decision? What's making you make that decision? So those are the questions, all those previous analysis, from identifying support and resistance, market structure, trend of the market, using using the other dynamic support and resistance I told you. All we've been treating is just structure and zones. Now, after you've done that, question is what next? You execute. But before you execute, you don't just execute. If you remember in our previous lessons, I told you, okay, even after marking these zones and you've seen that this zone is a meaningful zone, price doesn't just come there and you just execute just blindly. There are things you have to see to help you execute. And I made recommendation of a book, Japanese Charting Technique by Steve Nissen, for you to go through it and have idea what more on candlestick, because it's these candlesticks that will give you signal to buy or sell. So at the end of this lesson, you'll be learning what trade confirmation really means. You'll be seeing different type of confirmation. I'm not going to give you much. I'm just going to give you the basic one that like you could use anytime, like, and it's universal. If you want to go deeper and discover more for yourself, fine, but then the recommended one use normally, I'm going to teach you that in this video, how you would add everything about. So this video, how you combine market structure, trend line, support and resistance, all of those things, I make a decision. And also I'll be showing you common confirmation mistakes that as a beginner you are likely to make. Because why is this lesson important? It will help you avoid unnecessary loss, even though when you want to. Don't get me wrong, what we're doing is probability. So there are times even with confirmation, market will still go the other way around. But out of its sample size of 10, it will save you a lot more than just blindly pressing the buy or sell button will do. And then to help you with this, I created a execution checklist to help you. You are not doing this off your head. It's just a system you are following of what works, and you don't have to invent anything. All you just want to do is answer that question. And to help you, I would recommend you pause this video and copy this execution checklist and just use it. As simple as it sounds, as simple as it looks, it's going to help you a lot, and you're going to see the result if you put it into practice without having to get in the way with your thoughts or what you think. What me I think, what anybody thinks, it doesn't matter in this market. What will happen, because like I told you, they are the big guys, the institution, the banks making decisions. These are what influences what to move the market, not what I think, not what you think. Only thing we are trying to do with all this analysis is just to help us answer those questions and give us clue of where this price is going. With that being said, take note of this execution checklist. So what is execution checklist? Before you press either buy or sell, you want to ask yourself these questions. Location. Is price at a meaningful area? You know, what is a meaningful area? Meaningful area, like I told you, is either a support or resistance that has price has reacted on more than once on a higher time frame. What is higher time frame? Higher time frame starts from 1 hour above till daily. 15 minutes, 30 minutes, we use it. That's where you see your confirmation, the more reliable. All of these confirmation candles, you could see them on 5 minutes, you could see them on 1 minute, you could see them any 15, 30, 1 hour. But like you always know, the higher the time frame, the more reliable that confirmation is. So it's priced at a meaningful level. So what is a meaningful level? You might ask. Okay, so this is a resistance. This a this is a resistance. This is a support. A meaningful level is where price has come reacted more than once, two times minimum. Some the more reaction the better, but I would like to give you a minimum of two times, right? You can call that place a meaningful area because its price is not just reacting on that level, just on a random level. Something is happening there, and that makes us to know, okay, that is a meaningful level, either on a support or a resistance, right? Then another meaningful area is if you want to use the dynamic support and resistance, which is the trend line we spoke about previously. What you want to be asking yourself, what is the trend of the market? uh, but before you get to that question, is price at a meaningful level? So a new high is created, a new high is created. So for something to qualify as an uptrend, you have to see two higher highs and two higher lows. That's what qualifies an uptrend. Where this low, price came, it couldn't break this low. Price came, it couldn't break the previous low. That is what qualifies an uptrend. So also, if you just do the inverse of it, that's what qualifies for a downtrend. That's how you would answer the question of if this is a downtrend, um, this is an uptrend. That is a structural question, right? And then if you use the psychological levels, a meaningful zone will be the zones, major zones, example 4,000, 3,000, 4,100, 4,200, 4,300. But then the number itself doesn't make it a meaningful zone, but then reaction around those numbers more than once will help you identify if that price is in your location. After you've answered this question, next question you want to be asking yourself, has the market structure shifted? What is the market structure currently saying? This is where higher high, higher low, higher high, higher low. At this point, you know there is an uptrend, and then you start positioning for the buy from a higher time frame. So that's where you would answer the question of this structure thing to know if it's in an uptrend or a downtrend. So next question you want to be asking yourself after you've identified if that is an uptrend or a downtrend, you want to go candlestick. What is candlestick saying around that meaningful location, around that meaningful zone, around that meaningful, which is the main essence of today's class. And we have different type of confirmations you would want to check when price comes in to tell you that, oh, the buyers are still active there. Because example, a zone that has been holding off and price breaks off it, you know, you would be waiting for the retest of that zone. Because most times, anytime price breaks below a level that has been holding, no matter how far it goes, it always find its way back to that zone and retest it before continuing. So now that retest now, it doesn't mean when just price comes back to that zone, you just blindly buy or sell. Sometimes price comes and it falls below that line. There's every possibility for that. But then when you start seeing reactions like this kind of candle I'm showing you around that zone, then that's what will give you that, oh, the buyers have taken over. And at that point you can buy at either you can buy at this level and set your stop loss below this confirmation here, and you target double of what you are risking, which is 1 is to 2. We're gonna speak that about that when we get to risk management. But for now, all you need know is that confirmation to help you. So at this point we give you the permission to either pull the buy trigger or the sell trigger. So also for a support that has been broken, right? You hold on and be patient and wait for price to come to that level. So this guy here, is one confirmation I use. We call it the morning star, call it the evening star, you call it the doji, you call it the gravestone doji. All of those details you see in that recommended book I told you, you know more about the behind the scenes of what these things mean. But then basically, the confirmation candle you should be looking out for is the bullish or bearish engulfing candle. The bearish engulfing candle still looks just like this, where a candle just engulfs the previous candle, just like the one do it does here. So that is your confirmation candle you should be looking out for after. Don't just go and be seeing bullish engulfing anywhere. In a meaningful area, in a point of interest, in an area of interest, whatever you may call it, but then this is valuable to you when it happens in a meaningful zone. I keep repeating that because you see a whole lot of bullish engulfing or bearish engulfing and selling. No, you have to answer this question. That's why, just the way I told you, write this down, follow this question. After you've tick this, it has met this criteria, it has met your criteria of either it being an uptrend or a downtrend. Now the confirmation is where you are looking to buy. So confluence means do multiple reasons align that's making you to buy at that zone. What confluence is saying, more than one reason at that zone to buy. So what that means in simple English is there are some times where you would so have it when you draw your trend line, trying to connect this low and low, and it so happens that that trend line is still meeting at a zone where it was it was a resistance that turned support. It's not a criteria, but then when you see it, you are seeing that, oh, you are having more than one reasons that this zone is a valid zone. So that's what confluence means. You are seeing like up to two reasons, and it so happens that this same zone again is a major psychological level that we spoke about, maybe 4,000, maybe 4,100 or something, or 4050. So you are seeing 1, 2, 3, and you are seeing market structure aligning, you are seeing the zone aligning, and that zone, that's what how you take to identify to know that this is an A plus setup. But then even whilst knowing that, when price come there, you have to wait for this confirmation before you press the buy or the sell, and you're good. And that's the only time after these criteria have been met. Confluence, you might have two confluences, sometimes you might have one, sometimes you have three, but then the more confluence the better. But there is no 100% assurance in this thing. It's probability we play, right? But then what this analysis, all these things will just help you do is just help you to trim and make you avoid some unnecessary losses where you don't need to. So when you see this bullish or bearish engulfing, and the interpretation in English, it means the bulls have taken over, and then subsequently you'll be seeing buys. And when you see the bearish engulfing candle, you eat from this zone downward, it means the English interpretation of that is the bears have taken over, and then it's at that point you've gotten your signal to sell. Your selling is meaning that, oh, I've seen that the bears have taken over and I want to join them and move. Oh, I've seen that the bulls have taken over in that particular session, and I want to join them to move. And that's what just the English interpretation of what this is doing. It's like you want to enter a bus, so you are waiting in a train station, or you are waiting at the bus, the bus station, or whatever station it is. But then you won't just enter the train and move until maybe the driver signals that it's time to move, because you don't want to enter the train, in this case the market, where you don't know if the driver is going to move to the front side or to the back side. So that's why it's important waiting for confirmation. Do you understand? I hope this is making sense to you. And as simple as it comes, this is the part where you join. After joining everything you've learned so far so good up until in the previous lessons, then you can go and execute. So let's head on. Let me show you literal examples of what I mean. So we are on the daily time frame, right? And I'm gonna pick previous data of what happened, but then I'm gonna do another video where we would back test all these things. But here, let's just take it for, let's use previous data, because right now, so the day of recording, market is closed, right? So let's pick from previous data. So let's pick this range of where things have happened. Pick this range. Yeah, this support. So I'm on the daily time frame. You notice everything I'm doing, I start from the daily, then I go down to 4 hour, then I go down to 1 hour. That's how your process should be. Anytime you come to a new chart, you go, right? So this model of what we are speaking, you might not, you don't necessarily have to trade gold, but what you should know is it works across anything that is on the chart. Whatever it is I've taught you so far, you can apply it to whatever assets of choice that interests you to find more things about, right? You don't necessarily have to just be say go. So let's take this range and let me show you what I mean. So on this level, I've marked this level, that this level is a meaningful level. This zone, this is a support zone, right? And then look at another zone again I'm seeing here. I'm gonna pick this zone here again, yeah, so that I'll show you literal examples of what I mean by confirmation, right? For to make it easy for you, since you guys now know how to use the most easiest model, I'm gonna use the psychological level, the dynamic support, and resistance for you, now that you are aware of what it means. So I'm gonna embolden them, right? The star, yeah. So we'll do 4,500. Yeah, yeah, yeah. We'll close on 4,500. Then next we're gonna be looking at. Sorry for the interruption. Then 4,400. Let's work with psychological levels. So psychological level helps you filter a whole lot of noise. So let's remove this guy's self. Let's check out these guys. Don't bother, because before, when I was marking this, is for you guys to understand, but me, I do the advanced way. So we'll mark out our, let's go 4,300. Alright, so let's go 4,600. Yeah. So let's work with this range from 4.3. Let's do 4,200. So right. Um yeah. So let's drill down. Let's go in between and see what's happening here. So um let's work with price from 4,600 to 4,300. So let's start. So if I go, I want to split it 4,550. 4,550. So in between here, I'm having 4,450. 4,450. So for my 4 hour time frame, what am I seeing? I'm seeing the first off, I'm not concerned to either buy or sell. I'm on the trying to before then all this at stake. It hasn't happened yet. We're at this level. This data hasn't happened yet. So that's what we're doing. So what am I seeing happening? I'm seeing that this is a major low. Okay. Price came like there was a switch higher high. You know, from this low, I'm seeing that it made a new high. It took out this high. But then this high is not really an important guy because why? Mm, it didn't take out any low. So this is the main guy. This is the main conversation here. Why is this guy a main conversation? Because you would see that it took out the previous high that was here. So this guy is the main concern. Did price take it out? Price almost did. If you could see, there was a body closure, but not completely. But it closed, right? But then this is a little bit confusing. There was just one body closure, which was this guy, but then it didn't close decisively, but the body closed. So we won't consider it as a change yet. But then price came back. We're expecting it for a retest, right? It retested that level, and we are hoping for a new high to form now. But then it failed. It couldn't make a new high. All of a sudden, price came. You know, it couldn't break it. It went back up. It didn't make. It made equal low. It came back up. It couldn't make a new high. So from here we are seeing something happening. Then all of a sudden it went to break this low, and then we had this guy. This is an indication that the sellers are taking charge. I'm already seeing that the sellers are taking charge, but then we don't know yet why, because this is a um, higher high, right? Higher low, equal high, equal low, and then this now is our first lower high, lower low, and price never even attempted to come back to this level. He made another lower high, then went on ahead to break this level, another lower low. So from this point I've already started looking for myself, because I told you two lows, two lower highs, two lower lows. So from my market structure from 4 hour, I'm already seeing the BS taking over. It came up again to this was a retracement. So this retracement here, it couldn't even make another high again, lower high. So what would we be expecting from this point? I would have been expecting I've already started looking for sell opportunities, and then price coming around this level. You welcome my bro. Price coming around this level. So what is happening around this level? So this is a significant zone that we are speaking about. So then if we go lower and try to check what happened around there, come down to your 1 hour. Where is it? Okay, look at where it is. So at that level, what would have been our confirmation to say the same? Because you could see how this price, like, tried everything he could for price to not break this one, but ended up breaking, and then price, like, you know, formed a new low. So from this point, would have been waiting for some sort of retracement around this zone. Would have marked this zone here, waiting for price to come. But then this is our zone. This here is our zone here. So let's investigate further. Let me embolden it. So price came, and then remember our structures has already pointed us that the bears are in charge. So at this point, look at entry confirmation here, this level here. You see, this is 1 hour. So this is one of the things I told you. So look at, notice something. Notice something here. You see the bearish engulfing candlestick, but then it hasn't reached to our zone. It hasn't reached. This would have been our area of interest, because look at example of that confirmation I'm telling you about. You see this engulfing candlestick from this zone. You sell here, like, this was indication that, like, sellers took over. You sell from this zone, and you would have targeted this low, right? But then maybe most likely than not, you wouldn't have seen this a move. But then look at indication. There would have been people who read the market different, but then this is a confirmation on 1 hour. Do you see what happened after that? And then I just cited that so you see the significance. Look at this guy again, engulfing, and look at what happened. So every time you see this guy is an indication that at this zone there was a battle. Price broke, came back to retest. Look at another sell signal from this point. Stop loss above it, some pips above it, and you target double of what you risk, which is 1 to 2. You would have getting your target here. You understand how it works? Because this guy here is a significant zone. Is 4,000 is on our zone 4,550 is a range. So we don't just see engulfing just anywhere and sell. So example, in this level, what would we, if we drill down to, let's drill down to 30 minutes, would you have seen it? Let's drill down to 30 minutes. This was a very violent one. This was a very violent one down. This is an engulfing candle too. But then let's check it on 15 minutes. That particular zone. Let's check 15 minutes. And from 15 minutes, if you would have been anticipating from here, this engulfing. this guy, like these two, focus on these two first red candle. Why are you would you have you considered that it's because of the market structure that had been, forming lower lows and lower high, and this particular zone, is our significance, is our meaningful area, right? Because of, two time came down here, so there's high probability the third time is coming down around this zone. There's gonna be reaction, so what I've been looking for. So sometimes it gets into it, sometimes it passes, but that zone, remember I told you, price works with zone, not a particular price, right? And then from here, if you would have been anticipating the sell, this would have been a sell signal with your stop loss somewhere above here, and if you target double of what you risk, you would have gotten your entry, taking profit. Look at another indication again here. It's easy to say these things because the market is paused. That's not how it happens in real life. Oh. In real life, you would have to wait. It goes with a lot of waiting. Look at another entry signal here again. In real life, the way you are seeing me printing it out for you, simple, that's not how it works. You would wait. Look at another entry signal here. Why? If you didn't catch it here, fine. Market broke this level, came back and retested it, and then look at your confirmation signal. Can you see? Are you seeing the power time? Stop loss somewhere above it, target double what you risk, 1 to 2 risk reward. And at this level, you would have, look at what I'm looking, risk to reward ratio. That's why do you understand? 1 to 2, you would have gotten your take profits, even though price would have almost wanted to take you out if you didn't place your stop loss well, or maybe if you didn't place your stop loss well, you would have been hit at this point. But then this is a sell signal. Why? Because of this guy. Look at the entry confirmation that made us sell after price broke, tested that level. Can you see this red and green guy? Right? This is another confirmation signal again. Price reacted at that level. There's high tendency people who didn't get hop on the flight here might have seen this and would have entered sell here. This zone targeted 1 to 2, and they would have gotten their 1 to 2 risk reward. Do you understand? After taking profit, still came back to around that level, came again. Look at another reaction. So can you see this is a meaningful zone? Can you see how many reactions happening there? Look at what happened again. Bullish, bearish, engulfing. So why are we looking for sales? Remember, market structure from higher time frame told us that price was making new lower lows than it was making new higher lows. Am I making sense to you? So here you would have sold and you would have gotten your 1 to 2 weeks reward, and then for whatever happened, price still found its way back to this our zone again, and then what happened? Market range for a bit. Look at sell signal here. Look at one sell signal here, but then you would have been manipulated. Price came, took out the high, except your stop loss. I told you, if you engulf, you are looking to put your stop loss above the previous high, the nearest high, because you know that in a higher, why it's advisable to position your stop loss below the previous high is because if you do your higher lows higher, what confounds this to be a downtrend is the fact that he wasn't able to break this guy. He made a new low. He came again, couldn't break this high. Do you understand? And he went on to make a new low. So why you are positioning your stop loss is because you know that, okay, in 2 occasions he couldn't break the previous high. So when I'm looking to sell maybe around here, I'll be positioned. I won't put my stop loss because of, say, I want to just put my stop loss. You have to protect your stop loss, else you'll be hot above this previous high that like markets. Because in a sell situation, previous high are not taking, is just the lows that are vulnerable. Do you understand? So that's one way to position your stop loss, and that's why it's advisable. Just imagine you just put your stop loss just maybe below the previous high. You would have been hot in this kind of situation. Maybe you just put it here. You see how painful it would have been. It would have been hot, but then regardless of how price came, it couldn't take out this high, this particular previous high he made. So that's why putting your stop loss just above the previous high is important. Can you see how everything is forming? Then that same place we sold, look at what price happened again. You still have another engulfing candlestick there, right? Look at it here again, and look at what happened afterwards. Can you see after this guy happened, this confirmation happened on 15 minutes? Look at what happened afterwards. So is this whole thing making sense to you? Is the whole thing about confirmation making sense to you? So you won't just say here price reacted, here price reacted. So there would have been people who would have, it depends on how you read the market. And after this guy confirmed, look at the reactions that happen afterwards. Look at the sell. And it's all started from somewhere. It all started from here. But these things I'm saying, go your tax after this lesson. I did join everything together, just like I have said. Identify your zones, identify the market structure and the trend. Find mix everything together, just like you see me doing, and find potential sell or buy opportunities from data that has happened. So what we are doing here, even me, I do it sometimes. This is what we call back testing. This is you practicing, back testing with data, especially on weekends where the market is paused. It's a practice that you have to like you do, because all these things keep repeating themselves over and over and over and over again, right? So look at another zone here again. Market was supposed to sell, it didn't sell at that zone. Look at another zone here. What would have given us to sell? Look at our sell signal on that zone. It came. I wouldn't have just sold, I would have been waiting, and once I saw this guy, I would have sold from here. This engulfing guy, look at it. Look at this guy. Right? So look at the doji, look at the gravestone doji example I gave you guys. So in simple English, if I am to interpret what happened here, right? Market came, you could see the body closed. It came again, the body closed, then this guy engulfed. So look at two entry signal. Either you would have entered here, here, you are selling here, your stop loss above the previous high. Your stop loss should be somewhere above the previous high, right? This is the right move to make, and you are targeting double of what you are making. You are risking rather at least double. You can target more, but the standard I do is 1 to 2 risk reward. This was a long trade, and you would have taken profit around this zone if you would have sold from here, which is almost 390 pips. This is if you are taking the idea based of this signal, right? And then maybe you missed this. Market reacted, but it still came back to that same zone, and look at what happened. In case you would have missed and you were there seeing this reaction, simple, this happened. Look at your engulfing signal, and the PS have taken over. Your stop loss above the previous high, and then you'll be targeting double of it, and you would have taken your profits around here. Look at what happened immediately. So let me speak English for you what this happened. So market was supposed to sell here initially, but then it took out liquidity, came down, it made a new low. Look at the interpretation. I didn't just mark that one. Lower high, lower low. Lower high. It was supposed to continue, but then it came, took out liquidity, came, it broke this low. So then we would have been looking for a retest around that level, and that was why we were interested in this zone. And then look at what happened. This guy taking out, came, this guy taking out, came. So what do you think will happen? This guy taking out. Do you see how beautiful market structure is? It will simplify your journey. Like once, see, anything you want to do, just understand this market structure thing. Your journey will be easy. Like, so it came. Market would have wanted to break above this level. It came for that 15 minutes, it couldn't. It came again, it couldn't. So that's then to top it all. Me, I would have even entered from these two candlestick confirmations I saw, right? I would have even I would have even sold from here, but then if you wanted extra confirmation, look at it, engulf. What is the engulfing there? You see that this red candle closed below, and then look at immediately the sellers took over. Look at the reaction you're having around there, retest. Do you understand? Can you see the example? Let's look for more example. I could cite thousands of examples for you. So that's what tells us. That's why we are looking for sell opportunities, because you self-notice. Have you seen any high being created? Are you seeing any new high being created? We are seeing series of lows just being created, lows. So if you are looking for buy opportunities in this kind of scenario, tell me why you would be looking for buy opportunities here. Yeah, I know that this is a bullish engulfing candle, but then where are you buying to? Why are you buying? So just imagine you were buying at this point because I told you put it. So if you use all of these things very wrongly, you will get hurt. Just imagine you were looking for buy opportunities here. Yeah, you would have seen some profit because of this bullish engulfing candlestick you were seeing, right? And your stop loss here, you were targeting 1 to 2. You wouldn't have been even able to get 1 to 2, but you would have maybe seen some V1's profits, and then price came back straight down to hit you without even hitting your target. Maybe you are a scalper, it depends on who you are, but then 1 to 1 is not a good risk to reward. You are risking 1 to get 1 of something. Maybe it works for you, but then why would you be buying here? So can you see that, like, just using just engulfing or bullish engulfing candlesticks, you don't just use them anywhere. You use them in harmony with other things. So look at bullish engulfing candle, but then it was still taken out. Look at how, so that's how you know a downtrend. You keep seeing bullish engulfing, because quite alright, it's a battle. It's a battle between the buyers and sellers, right? Yeah. But then the sellers keep winning, the buyers keep winning. So example, look at this situation here. You would have maybe, say at this point, 4,500, I don't know. You would have said you wanted to buy here. You would have been lucky to get 1 to 2. Stop loss below here. You would have been lucky to get 1 to 2 if you would have bought from this point. But then somewhere along the line, that particular zone was taken out. For take it there, this was a strong support too. But then look at what happened. Look at what happened. Lows just keep being created. Can you see? Look at another engulfing candlestick here, bearish engulfing candlestick, just like the one I showed you. Can you see? Why would you consider this bearish engulfing candlestick? Why would you consider it? So this was a zone. 4,500 is the number here. It shifted a bit. 4,500, I think. Yeah. And if I embolden it to yeah, so if you notice, this was a strong support. Price came, price has just been reacting on that level. Anytime price comes, but then price broke it from here, so it went back above like it's recovering, but then somehow price still found a way to break that particular low. Like, look at what happened. It broke it, came back, we test that level that broke it. Like, he wanted to hold, he couldn't, then he broke, then tested lower high. So people that were anticipating, from here, you would have just sold here. Your stop loss below the previous high. Your stop loss below the previous high, target your 1 to 2 looks to reward. You can target more 1 to 5, 1 to this, but standard I use is what I'm telling you. 1 to 2 is enough for me. Then I go and look. You could look for 1 to 10, 1 to whatever, depending on what you are seeing. That now is based on you, based on your preference, based on what you've tested. And look at this clean trade, no drawdown. This side, can you see? We now have another low. If we mark this guy again, can you see? So we mark this guy again. Price came back to that level. Did the price break the previous high? No, it couldn't. Look at a high here. Came back to that level, tested it. Look at where you would have been looking to sell. This zone was broken. So it was forming like it was recovering. Came down, If you go lower time frame, you would have seen, and look at another sell opportunity that happened, Price came, look at another low. If we go, you'll see. So I'm just basically showing you how price did like a recover. It took out the new high. Price started recovering, it took out this high is important because it took out this guy. And price took it out, tested it, higher high, higher low, higher high, equal high, higher low. Did it take out these guys? After some while it did here. Higher high, higher low. Let's go. Higher high, higher low. But then it failed to make another high. So this is how then it went and broke a low. You might have not been sure. It came again, it broke another low. From here, you would have started looking for sell again. Why? Lower. It was higher low, higher low. It failed to make another high. You would have been asking, what is happening? Then it went on to break. It came, it couldn't break this guy. It came again. So then, therefore, next obviously would have started looking for sell opportunities already from those lows being taken. So this was the previous low. What is happening there? Look at another guy here. Right? Look at another guy. It gave us indication that it has tested. You sell here. Your stop loss around the previous high that wasn't taken out, and you target 1 to 2 weeks reward, and you're good. Look at what you would have gotten. Simple and short. A new low. This was the previous low. It was taken out again. So it's break and retest that I told you. This was a support. It was broken. The body closed below it. Came back to test it. Broke the next low. Came back to test it. So it's just break and retest that we've been doing here. Yeah? Look at what happened. Broke, retest, another new low. Right? Can you see? So that's how you go on and on and on and on and on. But then this whole thing would not be important, would not be valuable to you if you mix any other thing. You would have to. Let me go back to. Let me go back to that checklist in case you didn't write it the first time. Go and write it down. So you just follow those checklists, and once you see your confirmation, don't think it. You can pull the trigger, but then you don't just pull the trigger just anyone. First off, ask yourself, is price in a meaningful area? Meaningful area, support, resistance, anything you want to value. What is the market structure saying? Has the structure shifted bullish or bearish? You already know the criteria for bullish, uptrend or downtrend. Because this is what we tell you. It's from structure you start knowing what to look out for, either to look out for sells or buys. So then after you've identified if it's uptrend or downtrend, next up we are asking yourself, candlestick, is there a clear rejection or continuation signal there? Then you answer that question. Do multiple reasons align? If they do, then you execute. And what I've just been showing you is this thing I drew here. You see a zone, you mark it, it breaks, it comes back, it tests it, it goes. You have seen how it works. You see a level that was a support, and it breaks above, but below that level, break, retest, continuation. Come back to this low, retest it, continuation. Come back to this zone, retest. Sometimes it comes, take out liquidity, come back. That's how market moves. I hope I took my time. If you notice, this is one of the longest videos, but then it's very important so that you don't confuse yourself. So I hope you've been able to pick value. Your assignment here is to go to the charts, test, and go to any previous data of any charts, test, and immediately start testing, because this is where your journey has. Once you reach this video, congratulations to you, you are a trader. But then there are some few other touches I'm going to be treating in the next lesson. So I see you there, because right now execution is done. But then after execution, how do you manage your capital? What kind of mindset do you need to have? So we're going to treat risk management, we're going to treat psychology next. So hit the like and subscribe, so share to anyone you think this will be helpful, because I'm taking my time. If you want to pay for this lesson, people charge a whole lot for this knowledge I'm giving you, but then it's out of my heart. As I'm growing, I'm not a mentor, but then I'm just a guy sharing what he knows, and this will be helpful to you. You don't need to go pay anything, but then it's still important. Paying for mentorship is not a waste, actually, because even with knowing all these things, you might still mess it up, especially when real money is involved. So that's where you need a mentor who would hold your hand, who will guide you, but then you are the one doing most of the heavy lifting, because the end goal of this is for you to be able to do it, to be able to make money, to be able to make profit, solve your problem, and hopefully teach other people just like I am doing you. So with that being said, I see you on the next lesson. I remain Ghana Joshua, Lala Media Analyst. Bless up.